Hello. Good morning, everyone. Hopefully everyone's well. Got a little bit of the croaky throat this morning. People jumping on. Good morning, James and Jay. Christina and Russell, Manu, Helena, Ashley, Hardik, how are you, mate? Yasmin. Great to have everyone on this morning. Fantastic to have the regulars back. Quick intros for those who don't know me. Jason Whitten's my name. I've been property investing over 20 years, about 22, 23 now, matter of fact, and coaching property investors since 2003 across Australia and New Zealand, helping people build their property portfolios. Go the distance. You guys who are regular know this drill, and if you're new, give us a shout out in the chat. We've got a couple of sayings around here. Buy well, never sell. The idea with real estate is to own it, right? Buying and selling real estate is hard work. That's called trading. That's not investing. We're investors around here. The idea is we want to build a property portfolio for the long term, and we know it's going to take time. It's a marathon, not a sprint. And if you're dropping by for a bit of get rich quick, this ain't the channel for you. So keep moving because property is not a get-rich-quick scheme. Matter of fact, it's a get-rich-slow scheme. Quite slow, matter of fact, 15 to 20 years. Most of us have got to be committed to that, gang. So there you go. Big shout out. There's Heath and Glenn. Good morning. Simon, Nicole. You guys missed us on Friday. You missed me. You missed me and Andy. Well, folks, it was the show day here in the Gold Coast. A funny little day that we had a public holiday where I live. And, took a day off with the kids. Missed you guys too. But, family comes first round here. Hopefully you guys were awesome and well and could entertain yourselves. Andy and I also gave it a miss on Friday. But we'll be back this week, folks, nice and strong. Good to see you guys all jumping on today. So, I thought I'd quickly chat about structures. Now, one structure to rule them all, one ring to rule them all, one structure to bind them all. I get this question often about, how should I buy these properties? What should I do? What's the most effective way to own real estate, the best for ownership? A number of things. We want some asset protection. Now, asset protection is an interesting one. It can be used very wisely. And asset protection does not have to always have structures in place. And you and I, if you've been around long enough listening to me, we've talked about the simple asset protection structures. I'll mention that a little bit later. You want some flexibility, and flexibility for ownership. Can you own it together? Like, there's all sorts of questions around the flexibility. You want it to be tax effective. Can it help you in your world? Because, folks, it's about how much you keep, not about how much you make. And the number one inefficiency, the money that drains out of your world will be taxes, okay? And we can manage and minimize those legally. Tonight at Mentoring Team, gang, I'm going to be spending a full hour on this stuff in the Mentoring and Coaching night tonight. So make sure you join me tonight. Sam's going to be there as well. And we're going to have an amazing success story, how one of the investors now has 8 properties and is set up for their retirement. Retirement's a terrible word, I reckon, personally. I think retirement's a bit boring. Set up for freedom. And they're pretty happy about it. So we're going to go through that tonight. But today, I thought I'd give us a little tidbit, a bit of an insight into this stuff. Negative gearing. You hear a bunch of rubbish about negative gearing's bad. No, it's not. It's perfectly fine. There's nothing wrong with it. A negative cash flow property is not a great idea for you as an investor because it takes money out of your pocket. The process of negative gearing is offsetting a loss from an asset against your personal income. That's what negative gearing is. Team, gang, seriously. look into these things. Don't get caught up in passing commentary by, I don't know, silly people. I was going to say stupid, but that was probably a bit harsh. Anyway, negative gearing. Negative gearing's perfectly fine. Nothing wrong with it. But don't build your property portfolio based on don't build your cash flow based on the only way it works is with the tax back. Right? If it doesn't work stand alone, then you're going to have some challenges and you got to watch your dollars and cents. But team, gang, every single one of you will need a job unless you've got plenty of cash sitting under the pillow, and I'm sure that's not the case. And negative gearing is going to be good in the short term for you and your property investing. You don't want it to be expensive to manage and run. And you want it to be simple, like not complicated. I don't understand what you're talking about, okay? Now, how can we own things? We can own them as individuals, as that's a terrible drawing of a person, isn't it? Anyway, I think I better get some better art lessons. Anyway, we'll see how we go with this. So you can own them as an individual, a person. Now, the challenge with that is directly the asset protection is a little bit limited. But you guys have heard me talk about the triangle of asset protection for an individual. You've got insurance. You've got a good property manager, along the way. And you can protect yourself with the right lending, okay? That's pretty important to understand. But asset protection in the classic sense of the word is not as readily available to individuals. You got to analyze whether you're at risk or not, okay? And for most of us with a PAYG job working for someone else, the risk is extremely low, and don't get terrified by someone, usually accountants or lawyers, telling you you're going to get sued, okay? Weigh that up, because team, I've met literally tens of thousands of property investors, and I can count on less than one hand how many times I've heard an individual having a legal issue like that, okay? So the risk is low. Flexibility, as an individual, flexibility means can you change the ownership and stuff like that, and can you add ownership without costs? If you go, you bought it as an individual and then your partner joins you later in life and you want to add them to the title, you have to pay stamp duty. So flexibility issues. Tax effective. As an individual, it's very tax effective in most circumstances, but there's some other issues on tax effective transfers, okay? So you kind of got to tick in both boxes. Negative gearing is good, inexpensive, affordable, and simple to run. This is my preference, team, for anyone sitting out there right now, and you're going, okay, well, what would you say, Jason? Actually, that's not going to work, is it? My preference for you as a property investor is this one, okay? It has the best of the bunch for the moment when you're building your property portfolio if you are a PAYG earner and you're building a property portfolio. Lending is the thing we want in here. So lending with that flexibility, the idea that you need to be, across it when it comes to lending is super, super important, right? Okay, we've got to be able to easily get ourselves a loan when it comes to this stuff. Partnerships. Now, listen, I'm just going to put a big cross in that one for property ownership. I think it's flawed. At the end of the day, there's far better ways to do it, so I'm just going to put it in there. But there are people who have two people without complicated structures. But partnerships, I don't even know why they exist, to be honest. But they're not very good for you as a property investor as we go along. Now, companies and trusts, gang, are quite good for things when you're going to buy and sell. If you're going to renovate and flip, you're going to do a development, you're going to do those sorts of things. This is for active. Actually, you can't see that, can you? This stuff is for, active ownership, okay? Active investment when it comes to adding the value to the real estate. If you're going to buy something and turn it into a duplex and sell both, well, company and trust structures are going to be flexible and they're going to give you some value in that space. The challenge is down the bottom here. They're not great for long-term ownership, well, short to medium-term ownership as property investors. Actually, long-term, in 20 to 25 years, they're better in 25 years to own because you can do income splitting and stuff like this. The challenge is, gang, at the start, if you own properties in a company and trust, you can't lend as much. 80% lending, you can't use the negative gearing against your tax minimization. There's all sorts of reasons at the start that hold you back. But in 20 years, it'd be a more flexible structure. So that's a challenge, right? So you got to weigh that stuff up. For me, you can sort of own it together as a couple, right? Bill and Mary can own together, and in later life, that's flexible too. So it's not perfect, and that's the thing. That's the whole thing with this stuff. It's just never perfect. It's never perfect, and plus it's expensive. It costs you a lot of money. And it's not that simple. There's some compliance and stuff like that you've got to handle as you go along. So just understand that sort of stuff. And the self-managed super, it is a structure. It's actually a fancy flash company trust structure. It's just got some other rules it can abide by. But I quite like that structure. You guys know it's very effective. We'll talk about that tonight. The tax effectiveness of these structures. Now, when we're looking at structures, what are we trying to achieve? Well, team, we're trying to achieve minimizing our tax. We're trying to achieve minimizing land tax. We're trying to achieve, okay, so number one, minimizing land tax. All right, land tax. Minimizing capital gains tax. Number three, stamp duty if possible. All right, stamp duty. There's a way to minimize stamp duty. And also your PAYG variation, your own personal tax, okay? That's what we're trying to minimize. Those are the four main taxes that you as an individual, now there might be GST, but that's not necessarily effective for buy and hold real estate. But if you have a look up here, how are we going to minimize our taxes by having the right structures in play for land tax, capital gains tax, stamp duty, and PAYG variation? That's the big question as we roll along, right? So for me, for most of you guys out there right now, this would be my choice for individuals. And probably over here, go and chat to your accountant or your financial planner. But those two would probably be very, very useful when it came to minimizing these expenses as you go. So in that sort of stuff. So, so gang, now hopefully that made sense. A little bit of a shorter one today because, team, I'm going to dive into this deeply tonight at mentoring. So make sure you guys come along, okay? And we will get into it this evening at about 7 o'clock. I'm pretty sure. I can't even remember what time we start. But yeah, I think it's 7 p.m. Team, you guys know the link. You've received the email. It's in the Facebook group, and we're gonna make that happen this evening. So there you go. It's not as straightforward as you would hope. There are ways to manage some of the weaknesses in each of the situations. But again, you need to be connecting with your coach and your 6-star team to make sure you get this right for your personal circumstance. Someone might be a business owner. You might be a business owner right there now. There might be some risks and also might be some advantages of owning in company and trust structures if you're a business owner. But, you've got a job. You work for whoever. And, you've got a PAYG, and your income comes in fortnightly, it's very consistent. For you, the main thing is to be able to minimize that tax. Okay, that's the main thing. So, how do we do that? So, all right, gang, that's it. Wealth Coffee Chat done for today, Monday. Back at it. I had a little break on Friday, as you guys know. So, but listen, see you guys tonight, and we'll dive deep into it. We've got me, full hour on tax and structures. We've got Sam on the Forex growth strategy and property. And we have Riley and Laura bringing an amazing success story from one of our clients right now. You guys are going to love it. Make sure you're there. All right, team, that's it. Done and dusted. You guys have an awesome day. Bye for now. See you.